The reason why your trading account blew up wasn't because your strategy was bad. It blew up because you turned into a completely different person after 3 losing trades in a row. Think about your worst trading day ever. Not the day the market gapped against you overnight. Not the day some unexpected news hit. I'm talking about the day where you made one loss, then another, and somewhere in that sequence you stopped following your rules entirely. You started revenge trading. You've doubled your position sizes. You took setups you would never normally take. And by the end of the session, you'd done more damage to your account than the previous month of bad trades combined. That's tilt. And here's the scary part. It doesn't matter how smart you are, how much experience you have, or how good your strategy is. Tilt can and will destroy your trading account if you don't have a systematic approach to prevent it. So what is tilt, and why is it so dangerous? The term tilt actually comes from poker. It describes that mental state where a player starts making irrational, emotional decisions after a bad beat or a series of losses. They stop playing the probabilities and start playing their feelings. In poker, a tilted player might go all in on a terrible hand just because they're frustrated. In trading, a tilted trader does something remarkably similar. They abandon their edge entirely and start gambling. And here's the scary part. It feels productive. When you're tilting, you're not sitting there doing nothing. You're actively engaged with the market. You're scanning for setups and placing orders. Your brain is telling you that you're fighting back against the market. In reality, you're in one of the most dangerous psychological states a trader can experience. When you tilt, you throw your entire strategy out the window. You're just reacting emotionally to price movement, and the market has absolutely no mercy for emotional decision-making. The danger multiplies because tilt usually happens when you're already down. It's like a fighter who's already been knocked down trying to throw haymakers while dizzy. The probability of getting knocked out completely becomes exponentially higher. It's common for traders lose 3 months of gains in a single afternoon of tilting. I've seen people blow up accounts that took years to build because they couldn't step away after 3 bad trades in a row. And the worst part? It's never the market's fault. You did the damage to yourself. Let me be crystal clear about something. Tilt is extremely negative expected value. When you're trading normally, executing your system with discipline, you might have a positive expected value of, let's say, 1% per trade. That compounds beautifully over time. But when you tilt, your expected value doesn't just drop to 0. It goes deeply negative. You're taking trades with worse setups, larger position sizes, less analysis, and pure emotional reasoning. Your expected value during a tilt session might be -5 or 10% per trade. You could destroy months or years of work and hours. Here's what really happens when you start tilting. You take a loss, maybe 2 or 3 losses, and somewhere in that sequence, it stops being about the money. It becomes personal. Your ego takes those losses as a direct attack on your personal safety and identity as a trader. And that's when everything goes sideways. When your ego feels threatened like this, your brain literally goes into survival mode. Your body thinks you're under attack, even though you're just sitting at a computer. But here's the really dangerous part. When this stress response kicks in, blood flow actually gets redirected away from the thinking part of your brain, the part you need for rational decision-making. You literally lose access to your ability to think clearly and evaluate risk properly. Your brain is laser-focused on one thing: eliminate this threat to your ego. This is why you can know intellectually that you should stop trading. You can see yourself making terrible decisions, but you just can't stop. It's not that you lack discipline. It's that your thinking brain is essentially offline. Your ego is driving the car now, and your ego doesn't care about your trading plan or your risk management rules. It only cares about not being wrong, not admitting defeat. It's a vicious cycle that feeds on itself, getting more intense with each trade until you either run out of money or something forces you to stop. The key thing to understand is this: you cannot think your way out of tilt once it starts. You cannot be more disciplined or more mentally tough when your brain chemistry has literally changed and your ego is in control. This is a biological response, and willpower alone will never be enough to consistently overcome it. That's why you need a system. The fundamental problem is that you cannot think your way out of tilt in the moment. Once those emotional circuits are activated, once the cortisol is flooding your system, once your amygdala has taken over, your rational brain is offline. You can know intellectually that you should stop trading. You can see yourself making bad decisions. But you can't stop yourself because the emotional brain is now in control. This is why willpower and discipline alone will never be enough to consistently avoid tilt. The most common tilt triggers. Different things set off tilt for different traders, but there are some universal triggers that almost everyone faces. Understanding what triggers you specifically is crucial for building systematic defenses. The most obvious trigger is a losing streak. You take one loss, which is fine, it's part of trading. Then you take another, still manageable. But then a third, a fourth, and somewhere in that sequence, your brain switches modes. You stop accepting losses as part of the statistical process and start taking them personally. The exact number varies by trader. For some people, 2 losses in a row is enough. For others, it might take 5 or 6. But we all have a threshold where losses stop being data points and start being emotional events. Unexpected losses are particularly triggering. If you take a trade that looks perfect, that follows all your rules, and it just gets destroyed by some random event or sudden move, that can tilt you faster than 3 mediocre losses. It's the unfairness of it that gets to you. You did everything right, and you still lost. That sense of injustice can be incredibly hard to process rationally. Large losses relative to your account size are another major trigger. If you risk your usual 1% and lose, that's easier to shrug off than if you had a technical error and accidentally risked 5% on a trade. It's also why recovering from a large loss is so psychologically difficult. Winning streaks can paradoxically be tilt triggers too. When you've won 5 trades in a row, you start feeling invincible. You might start taking larger positions or looser setups because you're on fire. Then when that inevitable loss comes, it hits even harder because you were expecting another win. You go from feeling like a genius to feeling like an idiot in one trade, and that emotional whiplash can trigger tilt. Missing out on a big move is another common trigger, especially for FOMO-prone traders. You see a stock make a huge move, you didn't take the trade, and now you're desperate to catch up. So you start forcing trades, trying to find the next big mover, taking setups you wouldn't normally take because you're chasing that feeling you missed out on. External stress is a huge but often overlooked trigger. If you had a fight with your partner before you started trading, if you're worried about money, if you didn't sleep well, if you're stressed about something in your personal life, you're much more susceptible to tilt. Your stress bucket is already partially full before you even open your trading platform, so it takes less to overflow it. The only solution, a systematic approach. Now here's where most trading education gets it wrong. They'll tell you to meditate, to take deep breaths, to develop emotional control, to visualize success, to work on your mindset. And sure, those things might help a little bit around the edges, but they're all trying to solve an emotional problem with emotional solutions. You're trying to use willpower and discipline to overcome a biological response that's millions of years old. That's not a fight you're going to win consistently. The only real solution to tilt is to not rely on your emotions or willpower at all. You need a clearly defined trading system with ironclad risk management rules that handle tilt for you. When tilt tries to take over, you don't fight it emotionally or try to think yourself out of it. You just follow the system rules. You let the system protect you from yourself. This is the difference between amateur traders and professionals. Amateurs rely on discipline and willpower. They think they can just be stronger and not tilt. Professionals know that willpower is finite and emotions are powerful, so they build systems that remove the need for willpower entirely. The system makes the decisions. The system enforces the rules. The trader just executes what the system says. So what does this system look like? It starts with the most important rule for preventing catastrophic tilt: mandatory position size reduction after a set number of losses. This is non-negotiable. Before you start trading, you need to decide on a threshold. Maybe it's 2 losses in a row. Maybe it's 3 losses in a day. Whatever number you choose, once you hit it, your position size automatically gets cut in half for the rest of the session. Let me explain why this rule is so powerful. When you're tilting, your natural instinct is to increase position size to try to make back your losses faster. This is exactly when you should be doing the opposite. By having a rule that forces you to reduce size after losses, you're systematically preventing the most dangerous tilt behavior. Yes, this means you're potentially leaving money on the table if your next trade is a winner. Yes, this reduces your expected value in the short term. But here's what matters. The expected value of tilted trading is massively negative. The cost of reducing your position size after losses is tiny compared to the cost of a full tilt blowup. This rule also has a psychological benefit. When you know you have to reduce size after losses, it removes the decision from your emotional brain. You're not trying to evaluate whether you're tilting. You're not trying to be disciplined. The rule just activates automatically. 2 losses? Size gets cut in half. No thinking required. No willpower needed. The system handles it. The second critical rule is limiting your total number of trades per day or per week. This prevents the overtrading that often accompanies tilt. When you're tilting, you want to keep trading. You want to take more and more shots at making back your losses. A hard limit on trade count prevents this. Maybe you allow yourself a maximum of 2 trades per day. Once you hit 2, you're done. The platform closes. You walk away. Again, yes, this might cost you opportunities. But the cost of missing occasional opportunities is nothing compared to the cost of the overtrading sessions that this rule prevents. You're optimizing for longevity and consistency, not for maximizing every single potential gain. A third rule you can use is a maximum daily loss limit. Your system decides exactly how much you're willing to lose in a single day. Maybe it's 2% of your account. Maybe it's 3%. Whatever you choose, once you hit that number, trading stops immediately. No exceptions. No, just one more trade to make it back. The session is over. This is your circuit breaker. This is what prevents one bad day from becoming an account-ending catastrophe. The exact percentage you choose should be based on your risk tolerance and your strategy's typical drawdowns. But it should be low enough that hitting it multiple days in a row wouldn't cripple your account. Many professional traders use a 2% daily loss limit. Some use even less. And if you do hit your daily loss limit, the system shuts you down. You don't have to make a decision. You don't have to be disciplined. The rule makes the decision for you. This is crucial because this is exactly the moment when your emotional brain would be screaming at you to keep trading, to make it back, to not end the day as a loser. But the system doesn't care about your emotions. The limit was hit. Trading is over. These rules need to be more than just guidelines. They need to be unbreakable laws of your trading system. You should treat violating these rules as seriously as a commercial pilot treats violating safety regulations. One violation doesn't just risk one trade. It risks your entire trading career because it establishes that the rules are optional. And once you've demonstrated to yourself that the rules are optional, they lose all their power. Some traders will resist this level of systematic restriction. They'll say it feels too rigid, too limiting, that it prevents them from maximizing their edge. But here's the reality. Your edge doesn't matter if you occasionally tilt and blow up your account. A trader who has a slightly worse strategy but never tilts will massively outperform a trader with a better strategy who tilts even occasionally. The name of the game is survival. You need to stay in the game long enough for your edge to work. These systematic rules ensure you survive. Think of it like this. A professional race car driver doesn't drive at maximum speed all the time. They have systematic rules about when to brake, when to pit, when to back off, even if they could theoretically go faster. Why? Because one crash can end the race. They're optimizing for finishing the race, not for speed in any individual moment. Trading is the same. You're optimizing for staying in the game long enough to win, not for maximizing profit on any individual day. You also need to implement these rules technically, not just mentally. If your trading platform allows it, set hard limits. Some platforms let you set maximum position sizes, maximum daily losses, or maximum trade counts that physically prevent you from exceeding them. If that's not possible, you need to track these metrics in real time on a separate screen where you can't ignore them. Write your rules down. Print them out. Put them on your wall where you'll see them every single day. Before you start trading, Read them out loud. Remind yourself that these rules exist to protect you from your worst self. They're not restrictions. They're guardrails that keep you from driving off a cliff. You should also track your compliance with these rules in your trading journal. Don't just record your trades. Record whether you followed your position sizing rules, whether you stayed within your trade count limit, whether you respected your daily loss limit. Over time, you'll be able to see the correlation between rule compliance and profitability. This creates a positive feedback loop that reinforces the importance of the system. Tilt is probably the most underestimated danger in trading. It's not discussed enough in trading education because it's not as sexy as talking about indicators or chart patterns or strategies. But I guarantee you that more accounts are destroyed by tilt than by any other single factor. I've seen brilliant traders with great strategies completely sabotage themselves through emotional trading. I've seen people who understand the markets deeply, who can analyze charts beautifully, but who don't have systematic protections against tilt, and they always end up losing. The good news is that unlike reading price action or developing a winning strategy, preventing tilt doesn't require you to learn anything new about markets. You don't need to study more charts or master more indicators. You just need to build a system with clear rules that protect you from yourself. You need position size reduction after losses. You need trade count limits. You need daily loss limits. These 3 rules, implemented systematically and followed religiously, will protect you from 99% of tilt scenarios. Trust the system. Let it protect you. Your future self, looking at a growing account instead of a blown-up one, will thank you. If you found this helpful, hit that like button and drop a comment below. Thanks for listening.